Hey, what's going on, guys? This is Terrence Ray. We gotta crank up the live stream today. Right now, we got about 22 minutes before the closing bell, and I decided to go live. I was gonna record the video, but I said, let's come on and do it live. Um, right now, you got the market is rebounding a little bit after the sell-off yesterday. We got the S&P 500 futures up a little over 1%. 54 handles. We got the Nasdaq futures up 200 handles. It's over 1% as well. The um, the Russell futures are up 1%, 1.25%. Excuse me. And the Dow futures bringing in the rear. It's close to. It's about 0.86%. I'm looking over here on the left at my watch list. So it looks like the market is trying to make a rebound after yesterday. Now we got some heavy hitters for earnings after the bell, which is the main reason why I came on. I think we have. Let's look over here. We have Apple earnings after the bell. We got Amazon earnings after the bell. We have Meta earnings after the bell. And all I'm doing looking right here at this column was his earnings, and you can see you got the bell and you got the little sign after the bell. So that's showing us that we also have Altria Group has earnings after the bell and Eastman Chemicals, but the heavy hitters is Apple, Amazon, and Meta. Let's see, Bristol Myers and AbbVie is tomorrow, and so we'll get a big move in the Nasdaq. The rest of the market will move as well because I think those stocks that I name are big chunks in the Nasdaq. So we'll see that evident in the Nasdaq futures. We'll probably get a lot of movement overnight. Also in the Qs, the ETF. Now I posted this chart back probably like last week, I think sometime. Where you can see this bear flag right here in the Nasdaq futures, and that was back on what was that? January 25th. So if you follow me on Twitter and you see I posted this chart and you can see it went up a little bit and then it just dropped down. So now you can see we got a little bit of a pullback going into the close today. Now, what I think that the market will sell off. This is what I think. I think that I still got targets on this setup on the futures. So the Nasdaq futures, if the Nasdaq futures go down, then the Qs will go down. And so basically, I sold a call spread. I got coming into today, and it's down a little bit right now. But we'll see what happens tomorrow after we get those earnings. Let's take a look at Apple chart, and then I'm gonna get into my main presentation today, why I call the video "In Bonds We Trust." So right now we got Apple. We got Apple up about going into the close is up $2 and about 40 cents. So basically, you can just see that the past few days, Apple, let's see, one, two, three, four, five, 6 red days. And you can see it slowing up a little bit going into the earnings call this afternoon. Just looking at this chart, if we were to draw like a range, you can see, let's go out and let's go weekly. And so if we look at the weekly, you can see we had a doji candle last week in Apple. And then this week, look where we got a red candle. So if I was going to place a bet, like just looking at the chart, what I think the earnings would do, I think it'll continue to go down. But I could be wrong. They could blow out the earnings, and which I don't think that they will. And we could see it going higher. But for the most part, this earnings season, stocks haven't really reacted to the upside. Um, we hadn't been getting like, big bullish reactions. So I think that no matter what is said today, I think we'll probably get some chop. Maybe we won't get a big move. Let's take a look at Meta. Now Meta has been going up, up, up and away. Like this is the weekly chart. So if we look at this on a daily, I'm missing. I'm gonna put my RSI. Let's check the RSI. It's doing that. RSI is about 68.5. So not necessarily overbought, but you can see yesterday it gapped down below my moving average right here. So tomorrow we'll be able to see. I like this type of setup here where you get this gap down and it pull here. I wouldn't be surprised if it gap down tomorrow and we get a nice down move. What's the one I said? Apple, Meta, and then Amazon. Same thing. Amazon chart looks similar. So Amazon and Apple charts look similar to one another. Now, what's crazy about not necessarily Apple? Let's look at Meta, Amazon. Amazon pulling back so that MACD didn't actually cross over. But if we look at the Qs, the MACD crossed over. So you can say, well, what's the significance of that? Nothing too much other than the fact that you got divergence. So on the Qs, we drew like a trend line. Let's hide all indicators, do it like this. So we could man, we could probably draw this trend line from here just looking at it, right? Look at that. If I wanted it to. Now if I wanted to tighten this up, look at that. Just come here, tighten it like that, like so. Look at that. And so now you see how price kept going higher. Now let's bring the indicators back. Look at the MACD. So as price continued to go higher, the MACD, the momentum in the MACD started to turn. It even went down. See right here. So basically, it was beginning to slow down on its momentum, but price action continued to go higher. That's what you call bearish divergence. So with that being said, and we got the crossover right here, I expect to get a little bit more of a down move. I ain't saying we're gonna get. I'm still bullish overall in the market for the year, but a little bit of the market going to the downside will be healthy. It's healthy for the market, so I could see it turning over a little bit and maybe challenging this 50 SMA before we get some chop, and then it could resume its upward path. But that's one of the reasons technically why I am a little bearish overall in the market. Now, like I said before, the triple Qs, that's the ETF of the NASDAQ. So that confluence goes with my bearish levels over here in the futures market. So we'll see what we get after the earnings this afternoon. Now, the main reason why I wanted to talk about this video, in bonds we trust, because yesterday we had the FOMC decision, and basically they decided to stay put. No, they didn't raise interest rates and they didn't cut. And there had been some skepticism, not necessarily skepticism, but there had been some what's the term I'm looking for? People were predicting that maybe we would get an early cut of rates. And I think that this what we're witnessing now is something a little bit different. I don't believe that the FOMC is deciding anything. I think that they're looking at the bonds and they're looking at real rates and they're being front run, like the market itself is front running their decision. So let me show you what I mean. Now, since they've raised interest rates, they hadn't cut, right? They hadn't, they went on this for the past year or whatever raising interest rates. So let's look. So if they've been raising interest rates, this is the 2 year. This is the 2 year yield. So this mimics your interest rates. This is that. This is the opposite of what the bonds look like. So if I put up a chart of the bonds, which I will do after this, you'll see that the bonds have been going up. But look right here, you can see that this 2 year yield started going down. Now, this was also around the same time when what's his name, Bill Ackman, closed his position. Now, remember, Bill Ackman was shorting the bonds, and he closed his short. He covered, right? I'm talking about he called the bottom somewhere right around in here. He covered, and then bonds took off. Right? I don't know if he got long the bonds after that. I think he did put something out like, that he went on ahead and then got long the bonds. But as you can see, the bonds then went up. So we have the Federal Reserve is trying to decide whether they're going to cut rates or leave them the same or what. And the reason why they can't decide is because the market is going ahead of their decision. So they didn't have to cut rates. Here were the real rates right here. So you can see October 19th. Here's the 2 year yield. I'm gonna go back to the bonds, the TLT. October what? That's October. This is October 19th right here. So when Bill Ackman closed his trade, and then you see the mark, you see the bonds going start to ascend to go up, and then you're gonna see here go the rates. Here go your 2 year. You see them coming down. This is the Federal Reserve. Basically they control the 2 year and to a lesser degree the 10. So most people look at the twos and tens, and when they're talking about a yield curve, they're the majority of the time they're looking at the twos versus the tens. So right now you have a higher interest rate in a shorter term of the twos, and you can see the 10 is at like 3.8, right, on the yield. So when you looking at that, the reason why I said in bonds we trust, as long as we see the bonds continue to go up, you'll see these rates hold lower. Now they don't have to cut. They may just sit and just let the real rates sit where they are. Now, if they were to cut, now we'll be able to tell if they're going to cut. And the way we'll be able to tell if they're going to cut, just watch the bonds. These bonds keep going up, then they'll cut rates. Or they'll leave them where they are. They don't really have to do anything. As long if the real rates of the market is going down because traders are trading these, then they don't have to do anything. And the reason why I said they didn't have to deal with this in the past, now we have platforms like I'm on a platform now doing my channel. I can click right now and buy this 2 year if I want to. I can literally come to the trade tab, go to click on active, and come right here and buy the 2 year, like literally right here. And so, with that being said, before you had to call a stockbroker, you had to, especially in retail, we didn't even have access to stuff like this. They didn't have certain um, products like they do now that you can trade and put this trade on. Um, so what's going on with technology? You got algos, you got hedge funds, it's so easy for them to put the trade on, for them to go the other way. They can front run whatever they think the Fed is going to do. The last thing I want to show you guys. Yeah, I'm going to get busy today. How I want to show you how it's not like you don't have to guess about this stuff. I'm going to show you. You don't have to guess about what the Fed is going to do. I'm telling you, and I'm telling you, they don't know what they're gonna do, and I'm gonna prove it to you that they really don't know what they're gonna do. And why wouldn't they know what they want to do? It says that they'll come on TV and say, "Well, we're data dependent." Nah, they watching the real rates, they watching the bonds, and the bonds is telling them. what to do. Depending on what the bonds is doing, that's how they decide whether they're gonna cut or raise or stay still. And I'm gonna show you that they really haven't made a decision yet. Here we go. Now, what you're looking at right here is something called, this is the CME Fed Watch tool. I've shown this before. You see right here, I don't want no cookies. How can I? There we go. All right. You look right here, you see. So this is showing you, look up here. It says March 20th, 2024. I don't know if it's big enough for you to see, but right up here where my cursor is. Now, the current rate as we are right now is 525 to 550. 5.25 to 5.5. That's our current target rate or current interest rate. You see right here where it says 61.5, there's a 61.5% that they stay right here and don't do anything. There's a 38.5% chance that they cut. Yesterday, I looked at this same tool, and yesterday it was 57. No, excuse me, it was 53 to 47. It was 53% in favor of a cut, and then 47% in favor of them staying still. It was almost a 50-50. And then the market has changed today. Why the market change? I mean, what would make it swing like that, right? Actual movement in the market. Actual movement, another 2% up in the bonds. They don't have to, the 2 years already doing the work. The real rates are already dropping. So they don't necessarily have to come in and cut. They can talk. He can come up there and slow roll it and talk to people and say things and move the market that way. Because then the market is gonna actually come out and then do it. And so that's one of those things where you don't really have to get caught up on whether he's gonna cut or not. Like, to me, I don't really care anyway. You just trade it when it happens. Trade what you see. It gives them something to talk about on TV. But if you see these rates, if you see all of a sudden you see these interest rates start bopping up, running up, and you see the bonds come down, you know, then he'll come out and then make a decision. You'll see those numbers change. These numbers right here, you're gonna see them change when the market changes. And you can see what I'm saying right here at the bottom. It says 1 day. So right here it says now. But if you look right over here where it says 1 day, you'll see yesterday it was 52.8% that they were gonna cut. Now it jumped all the way down to 38.5 just because the bonds went up some more today, another 2%. And you can even go to May. So we can click on May and see what it looks like for May. We can click on June. And so you can always just you can Google Fed Watch tool, pull it up, go to the CME group.com and find the Fed Watch tool. And from there, you can keep up with what if it's that much of a big deal to you, or you can just go ahead and put the 2 year and the 10 year on your watch list and then watch it. No, but better yet, just watch the bond market. The bond market was selling off, selling off. You see how it's just dropping, 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 dropping. Basically, all last year just dropping. What was going on then? They were raising rates. And so we got about 3 more minutes before the closing bell. I'm gonna get ready to pay attention to these earnings, and we'll come back. We'll see tomorrow. We'll see what it looks like. Tomorrow maybe I'll go live in the morning. Make sure you guys hit the like button, hit the subscribe button. Make sure you put the bell notification on because you never know when I'm gonna go live. And if I go live tomorrow morning, we might do some scalping. If we get a big trade. Last time I went, was I live? The last video I did when I talked about the what I don't even remember the trade. I think it was CRM. Was it CRM? think it was CRM. Hit my target. I came on, talked about the trade. If you'd have been on here, you'd have seen went straight to my target. I think I did that last week. You see right here, gapped up, pulled back, boom. I threw my targets on, my fibs. Like later on that day, you can see, boom, hit the last target. And so I just happened to see that trade. That's just one of them things where I seen it, boom, jumped in it, right? It don't always be like that. So that's why I said if I see a trade, I don't like to come on unless I got something to talk about. And with that, guys, I'm gonna get ready for these earnings. Then we'll dissect them a little bit. Maybe I'll come on later on tonight. Just depends on if we get some good stuff in the earnings call. With that, guys, I'm out. Peace.